Wanted to take a look at Google stock, of course, GOOG being the symbol, Alphabet, the parent company name. It's an AI stock to buy, of course, and Google, GOOG, the symbol, is underpriced. When you look at future earnings per share, when you break down the financials for Alphabet, the company, you see that on a relative basis, Google is undervalued to other investments out there. Now, a lot of these AI stocks are really starting to take off simply because, and we look at NVIDIA, of course, being sort of that poster child. We're going to see a lot of ramping up with regard to what's going on with AI stocks. Google had a little trip and fall. Chatbot things didn't really play out very well, but we're talking about Alphabet, the company, which the behemoth that they are, being undervalued. There's a lot of relative value. GOOG stock would go higher. And since it is underpriced versus all of its peers, especially the Magnificent Seven, this is one that I think is going to appreciate in value. Now, we did get some inflation numbers here this morning, and because of that, it looks like the stock market is pausing at this point. Initially, it shot up, but it's starting to sell off, and I expect this will affect a lot of these stocks. So with GOOG being underpriced like it is, if it continues to fall, if we see movement downward because of inflationary concerns based on interest rate numbers, Alphabet, GOOG, the stock, could be a long-term buy with a lot of appreciation packed in, because investors haven't pushed this stock up as much as they have other stocks. Let me break down all the numbers I'm looking at, and I'll show you what could potentially happen with Alphabet stock, GOOG. Let's jump in. Was the chatbot backlash overdone? This is a real nice article off of Investor Place. Now, I approach stocks from a value investing perspective, and I ask the simple, basic question. On any given day, Mr. Market's going to give you an opportunity. Right now, looking at the U.S. 10-year Treasury, the benchmark, the one that you compare all investments to, is trading about 4.15%. It's moving a little bit higher. Eventually, however, that price will, yields will fall, and the 10-year Treasury price, because of the inverse relationship, will move upward. So buying in on the U.S. 10-year Treasury being your benchmark at 4.15% is what you're going to compare Google and YouTube parent company Alphabet, GOOG stock, as a potential buy. Alphabet outperforms on a relative basis the U.S. 10-year benchmark investment rate. So the backlash overdone by the chatbot thing might be the buying opportunity. But here's another article out of MarketWatch that I really liked. You get all these, so on average, the SPY stock, the S&P 500 ETF, continually has just been moving higher and higher and higher incrementally. But within that, and I like how they kind of did this comparison, it's a duck market. You see this duck calmly moving across the waters. But underneath, what you don't see are the massive movements in the duck's feet, forward, backward, forward, backward, forward, backward. We get a lot of stocks that individually might spike up, then sell off, might spike up, then sell off. SPY stock, generally speaking, the S&P 500 is on average kind of just moving higher and higher and higher, despite the fact that there's individual stocks that may be moving downward, then back upward, then back downward. Why Google is a long-term growth stock? Simply put, when we look at AI is going to be so huge. We all know this. We look at the poster child NVIDIA, NVDA stock. I just put a video out yesterday on that. It's actually, that video did very well. NVIDIA itself is overpriced, despite all the future gains we might be seeing. All right, yes, we are going to see a lot of revenue gains. NVIDIA may have been overbought at this point, but then you look at Alphabet, who really hasn't kicked in on their potential AI yet, because you get those semiconductors, the structure, the hardware first, but then you get the services in the cloud. And that's where an Alphabet company is really going to accelerate. But we're not seeing that growth just yet in a lot of these companies. And that's where the underappreciation it really comes from. So on the one hand, chatbot backlash. Sure. Okay. So the stock fell out of favor for a moment. Does that mean it's the end of the world for Alphabet company? Absolutely not. For a long-term investor looking for value, it is underappreciated when you look at from a comparison basis your benchmark investment rate, and then you start comparing Alphabet, the company, to its valuation to, say, the rest of the AI stocks, and you realize it's not appreciated nearly as much. So you have this moment where Google stock has dropped because of a one-time thing. They'll get it right, but the eventuality is Alphabet stock does move higher. Taking a look, as you can see, we did see some movement lower on the latest financial earnings release. It may very well be that this week, because of inflationary numbers, the stock market, broadly speaking, doesn't matter how many flaps the duck's legs go, we're probably going to see some selling because of inflationary numbers and interest rates moving higher. That could present more of an opportunity to get into Alphabet stock. As you can see, quarterly revenue, we did see a big jump in Q4, but Q4 tends to be a little higher because you get all the sales for the holiday season. But what I like to look for is projected revenues. 342.7 for 2024. Then 2025, you're looking for about another, say, 35 billion more of an increase, which is a lower rate of growth, but not much lower. Net margins, 24%, which means for every dollar, Google Alphabet company is keeping 24 cents. The S&P 500 is about 11.5%. So this outperforms. Yet, Alphabet, the company, the stock, is underperforming. Earnings per share, here you can see $6.79 is the projected earnings per share for Google. But what I wanted to look at is the comparison. Let's break this down. Current price, $139.42. At the time that I'm putting this on, the market's still going. The market seems like it's kind of pausing. Despite the inflation numbers coming in, the stock market, broadly speaking, shot up, but now it's kind of taking a second look. Bond yields continue to trend higher. That will affect the stock market. So 139.42 right now. The 679 for the future 2024 earnings per share projections gives Google, GOOG stock yield 4.87%. So you have an investment choice. The 10-year Treasury trading at about 4.15% to 4.2%. That's your benchmark. When you look at Alphabet, the company, what it could do with earnings per share on a yield basis, given the current price at $139.42, 4.87%. Now, you don't get all of that as a dividend, but the company will retain what it needs to retain, then invest. That's where the AI is. So you're getting more of a yield because that AI could exponentially really accelerate future earnings and revenue. So the fact that Google is trading below the 10-year Treasury is huge, mostly speaking because AI growth will outpace what you can earn off the U.S. 10-year Treasury. That's huge. So the fact that they had their little mismatch with chatbot, the fact that we will probably see some selling because of inflationary numbers, puts Alphabet, an investment in that as a value investment perspective, in a really strong position, more so than the other Magnificent Seven stocks. Take a look at Tesla, it's like 1.87. NVIDIA, 2.25. You look at all these stocks that, despite AI being sort of a big focus, some of these are overpriced. Google, Alphabet, the company, is definitely not. I'm going to continue to break down these AI stocks to buy because these are obviously a big factor what's going on, but at the same time, I always break down the economy. None of these stocks operate outside of a contained environment. Because of that, you need to incorporate the economy into your analysis. Make sure to hit that like and follow button. We'll see you in the next video.